Welcome to I Hope This Helps. We have an exciting guest today. We have Pete from RealSafe Title. Pete, thanks for coming. Tell us a little bit about yourself.
Eric, thank you for having me, man. It's good to see you as always. I've been in the title business 20 years, coming up on 20, actually. In February, it'll be 20 years total. I'm 45 years old. I married, one beautiful daughter, beautiful wife. So thankful for them. They are my reason for living every day. And I've been in the title business quite a long time now, seen some changes, seen some things, been through, the ebbs and flows of the industry, as have you. And thankful that we've became friends and business colleagues and associates and whatever you want to call it for as long as we have. The thing I am thankful for in this business is I get to meet people like you. I get to meet a lot of like-minded individuals, people that, I've grown to have a strong connection, friendship. I love you. You're my boy. Like,
I love you too. And honestly, man, you know what I'm really happy for? That you threw in your daughter and Viv right off the bat. So you get to live another day to come hang out with me.
Yes.
Viv,
yes.
he did a great job there. I guess you've been training him because let's not spoil alert, but Viv is a little bit of a TikTok star doing her thing. So looking forward to interviewing you too, Viv. Let's go. So how did you get into title?
After college, I did take a year and just bartended. And I actually ran into a couple friends, customers that became friends. They were opening a mortgage company. So I worked for them for a little while. But I was so green that I didn't even realize or know. I just saw, okay, I can make, X amount of dollars on a loan. Okay, that's great money. But I didn't even know the simple fact that I had to go develop relationships with realtors in order to get business. That's how green I was in the real estate game at the time. So the lending side or the mortgage side, after being around it for about 9 months, a year, wasn't really for me. But I had found out what title was. I had met somebody that was selling title insurance. A position opened, ironically, in the same company, well, not the same company, but a company that my current boss had worked for. So we had met back then. He became my manager, my team lead, taught me a ton of things. So that's how my title career started. And, I went and got licensed, interviewed, got the position, and, pretty much the rest is history. So we've came full circle. I'm now working with that guy I met back then, now, and couldn't be in a better place.
All right. So you said a lot in your intro. You said you've seen everything, been in the business for 20 years. You've seen a lot of changes. So from day one, let's say 2005, right? Somewhere around there. Mm-hmm. How much has it evolved from then to now?
On our side of the industry and my position in general has somewhat morphed. Like anything, once you do it for long enough, you learn more and you kind of find your niche and how you want to run your business. So in the beginning, when I first got in, it was mainly attorney driven. We would go after attorneys. They would handle ordering the title work on purchases, loan officers on refis. So those were the two, main people we would go after. In the beginning, it wasn't easy going in and talking to attorneys at a 25-year-old, fresh out of, our course and freshly licensed. And sometimes, to be perfectly honest, I would pull into an attorney's office, try to work up my courage to go in, and I'd just turn around and leave and come back another day because I just wouldn't have it that day for whatever reason. But now over the years and as you know as well, I come from a bartending background through college and, in the ebbs and flows of the real estate market, I've always tended bar for a while. Out now, thank God. But, it set me up to be able to communicate and talk and connect with pretty much anybody from little kid to, a 90-year-old man or woman. So thankful for that. But how things have changed is it's more realtor driven now. So we develop more relationships with the realtors. Same with the attorneys and the loan officers as well. But the real estate offices have formed lots of partnerships with title companies, and they pretty much direct the attorneys where they want to go with their title work. So it's been more of that, whether it be an individual agent or the entire office that we try to capture. So the way I run my business, I like to connect with people that I get along with. I like to do business with people that I like. It's not that I exclude anybody, but it just makes things easier. It makes things like this more fun. I pretty much I'm a salesman, but I try not to be salesy. I want people to know that I'm here to do the right thing. I care about your deal. I care about your client. I care about you as our client and friend. And I like that. Try to develop that relationship with everybody that we do business with.
You said actually something very important. You said the word sales, and most people shy away from saying sales, like it's just a taboo word. Guess what? We're all in sales. I don't care if you're a doctor, dentist, or whatever you are, right? You're selling something. You're selling a service. But one people that you didn't sell yourself as highly as I would, because if anyone that's ever done business with you knows how much you care. And if something goes wrong, you take that personal, and in 9 out of 10 times, it's never even your fault, right? But you'll take the bullet for your staff, and they should be very lucky for that. You'll do it for the realtor that referred you the business, even, if it's their fault or not. You'll always be there to battle. So the fact that, you undersold yourself on that, like the way that you care and how you conduct your business. And that's some of the things that I've always appreciated by doing business with you. The other thing that you said is that you don't tend bar no more. I'm glad for that. But if I ever went out, it would be nice to have you behind the bar, because now it's hard to get a drink anywhere.
Agreed.
These people look over. If you're not out in the scene anymore, they just look right over you anymore. Like, hey, you're nobody. Like, damn, dude, you should go back to doing maybe just a night or something.
I've been out of the bar maybe 6, almost 7 years now, and the first couple of years when me and my wife would go have dinner, have a drink somewhere, finally being on the other side of the bar, she wouldn't enjoy it with me, because simple things. Get a hamburger, maybe give me some ketchup. Get some wings, some extra napkins. To me, it was a very simple job in the beginning, all the way through till the end, no matter how, I did it 20 years as well. So it's not that self-explanatory to everybody. So I would find myself critiquing everything, but it's only because I want these things. I want good service, and I'm willing to over tip. I over tip anyway, even if the service is so-so. So getting good service, I want to give that bartender or that waitress or waiter my money, because I'm going out to spend it and have a good time. And I don't want to have to get up and get napkins myself, or have my drink be empty, or, simple things like that anybody else would want when they go out.
And of course, and that's what makes you excel at your business. It's a service industry.
Yes.
Guess what? Title's a service industry, because you're
Yes.
not going down and recording the deeds. You're not going down there and doing the searches.
Mm-hmm.
You're providing a service and making sure that your staff is doing what they're supposed to do, and you're going out there and making sure the closing is going, completely perfect and online, right?
Mm-hmm. Yeah.
Correct? Yeah. And then that's where maybe certain people in any type of service business, maybe they should go 10 bar, to be honest with you. And it'll help them speak, because a lot of kids nowadays don't even speak to anyone.
True.
And
Yes.
I'll help them with the social aspect. And the other thing is to provide a good service, because at the end of the day, you have all the technology you want.
Mm-hmm.
People still want to be guided and helped and get a good service.
We naturally, and I'm no philosopher, but we naturally as human beings need human contact. We're stuck on our phones a lot. We're stuck behind computers a lot. I'm on the road a lot by myself, so having that interaction is important. And a lot of people are losing, the younger generation is losing that skill, and it will, working in a bar or restaurant, I always said that I think everybody should do it at a certain time, because you're going to get people that are great, that you're going to gel with. You're going to get people that you're not. And to balance that and keep an even keel and learn how to deal with somebody that may be impossible to make happy, which happens from time to time in every business, even our business nowadays, is very, very difficult. But for an individual or for me to, okay, I look at that like a challenge. Like if I get a call from a client like, hey, we got this closing coming up and the buyer is real difficult and they have a lot of questions. And I almost look at that like, okay, I want to break this person down because I know I've done thousands of closings at this point in my life. So I know I'm good at it and I know what questions are going to be asked. And I look at it like a challenge, like, okay, well, if this person's difficult or stressed out, it's a stressful process for everybody, especially if average person buy 1 or 2 houses in their lifetime. So it's a challenge for me. I'm like, okay, I welcome that difficult person or that, and I don't even want to call them difficult, that it's a high level of stress, so they may be a little nervous or anxious. And I welcome that because I want to let
Let's
them.
call them more detailed. How about that?
I want them to be comfortable. And at the end, when they shake my hand or I say congratulations and we're all sitting there like, oh, that was easier than I thought. And I'm like, well, luckily I come in at the end is all the hard stuff is over. And, I just have to explain these documents to you, which I've done 1,000 times. So I welcome that kind of challenge in the business. And I want difficult people sent to me because
more detailed people.
Sorry about that. So it's satisfying, and back to my original point of how everybody should have a service industry job at some point, no matter what position you plan on going into in the future for your career. It just helps all around because no matter what, you're going to be dealing with people. Even if you're sitting in your house and you work from home and you're on a computer all day, you're still going to be messaging people throughout your company. You're going to be dealing with possibly vendors or whoever. And having that skill it just makes your life easier,
So I believe a service industry or sports or something like that, like to teach you
teamwork,
teaching you, the ups and, of winning and the dread of losing. It's all part of growing up and actually making you a better person in many ways. Okay, so I can see how your business philosophy has evolved in title. How has title itself evolved in the last 20 years?
Yeah, so besides it being mainly attorney-driven, years ago, more realtor-driven, like I said. So it's a little more work in that sense because you can go to one attorney office, and if they were able to choose, say we develop a relationship, you're an attorney, and you have business from 20 different realtors or real estate offices, you could funnel everything through me. That's how it started when I first got in the business. Now you have to go to each of those realtors because the attorneys are pulled in many different directions, working with many title companies. And so the realtors are dictating that. On top of it, as you know, we've changed from what is called a HUD, which was a closing statement. And on that closing statement, it would have, buyer fees, debits, credits, seller fees, debits, credits. Both of us would sign, both sides of the transaction would sign that document. Boom, done. Sorry. Boom, done. Now, buyer has a CD or a closing disclosure. So 5-page. That was a 3-page document, the HUD. Maybe 4 with a signature line in the end. Now, buyers have a closing disclosure with all their fees and everything on there, about 5 pages. Sellers have a 3 or 4-page closing disclosure of their own. And then we'll still sign a similar form to the HUD. The HUD just won't have any of the buyer's loan information on there, rate, payment, all that. Because the higher ups make these decisions and don't ask any of the people that
actually do the work.
ants that do this on a daily basis.
So basically, you're saying that title in the last 20 years got more regulated?
Yeah, a little bit,
Right,
a little bit. So
just the mortgage industry and
and then on your
industry.
side, you got to get the CD out 72 hours before closing.
Of course,
buyer has to have time to review it, even though you're going to go over with them initially and give them an estimate about what to expect at closing.
with the loan estimate, basically the loan estimate, the pre-CD and the the closing disclosure are all pretty much the same.
Yeah.
The only difference is your final CD is the actual numbers
Yes.
that, because they'll actually have the day of the closing, the exact fees of title and any other fees that, got thrown in there.
Yeah, I mean, the only time that will differ, and it's not even drastic, is depending upon when we close in the quarter.
Yeah.
Depending
that's
upon
it.
when we close in the month, the prorations for the taxes. So maybe go up 1,000 or down 1,000, depending on
Exactly.
the timing. But the numbers that you guys initially give are, and I've
That-
done
that-
quotes
that on there,
for
of course.
clients and your clients, and our numbers really won't change,
Yeah.
give or take $50.
Of course.
So
Technology has helped a lot. I'm sure title is a lot faster to receive now, right? 20 years later.
yes,
Recordings are quicker as well.
for the most part, a
Okay.
lot of stuff is moving online. So we'll be able to record mortgages and deeds electronically now instead of having to physically mail this stuff down to the county clerk's office. It sits in a pile for, a couple months. Then when they get to it, they get to it. I've had clients over the years call me and say, I haven't received my deed yet. And I called the county and they said they're not backed up at all. And I said, well, they're not really going to tell you that they have a stack of 200 deeds in front of yours before that they have to, that they're behind on. And it just goes with the ebbs and flows of the business. If we're in a busy, real estate market, there's going to be more there. And the same thing online. It's just a quicker process. And what a lot of counties are now providing. So if you see, commercials for monitoring your social security number or monitoring the deed or title to your property, there's alert systems that the counties have put in place. So when you become a new homeowner, you can call the county and say, hey, most of them have it. Not all of them yet. And the same thing with the online recording. You can call them and say, hey, I'm a new homeowner of this house. I want to sign up for your free alert system that if there's any movement or anybody tries to go in and change that deed or, unfortunately we live in a scam world, they will alert you, hey, somebody's trying to change ownership to the property. Is this you? And you just say no. So
wow,
you don't have
that's
to
great.
you don't have to necessarily, I'm not trying to cut out Title Lock or whatever the companies are called, but
Please do. This is the whole point of the show. It's called I Hope This Helps.
Yes.
Let's
All
help
right,
people
good,
out.
good.
That's a good nugget. So wait,
yeah, so
we're in New Jersey. Which counties do provide it? Are you aware or not sure?
I know, I'm pretty sure Union County, I think Essex County may. I'm not 100% sure on exactly which counties. Should have been a little more prepared for today.
That's all right. Maybe we'll do a little
we can do a
behind the
follow-up.
scenes and we'll look it up
We
real
can do a
quick.
follow-up, yeah.
We'll put it on the show notes.
But I would just call, I will call your county clerk's office once you buy a house and ask if they have it. If they don't have it, recommend that they do because eventually everybody will have it. So, but there's a lot of counties that move towards that. So that's gives people a little more peace of mind.
That makes sense, especially if you're doing everything online now.
Yes.
Because what happens, these tech nerds that are, computer tough guys sitting in a room stealing all our data and making millions of dollars off of it. Now everything's going to go recording online. What do you think they're going to do? They're just going to own all the real estate there is.
Yes.
So if we do have these systems, and I would hope we'd actually have these systems before we would even go online. And I'm glad to hear that we do.
Yeah, and just another little bit of information. When a deed is recorded and a mortgage is recorded, which everyone is, every time somebody purchases a house, it is public knowledge. So anybody can go in there and say, all right, I want the deed to 123 Main Street, and the county charged $10 or whatever, and they'll give it to you. Sometimes you can look it up online and get it. So anybody has access to this stuff.
EssexRegistered.com, I believe, is Essex County. As long as you have a first and last name or the, what is it called? What is it called? The lot and
lot and block.
Yeah, lot and block. You can get everything. Oh my goodness! I just had
Even just the address.
stop. Yeah, a lot of times even just the address.
So.
Now, providing that we could go online. Since you opened up this Pandora box, right? Let me ask you a question. Now, let's say somebody does get their information stolen and they only find out as they're doing a refinance. How can title companies help these people? How does that go?
We have two types of policies. So we have a standard policy, we have an enhanced policy.
What was the second one?
Enhanced.
Okay.
So it is an increase in premium cost for the actual policy itself, but it gives you many coverages, which would be very boring to list for you guys. And I don't know off the top of my head, but I can get a breakdown to anybody that's interested of what we will cover after closing. So anytime a deed or ownership is transferred over from a seller to a buyer, there has to be a notary there to sign and witness these things. So if somebody did try to steal ownership to your property, your safety valve is that, yeah, I never, and say you went to refinance or sell your property. No, I own this place. I've never signed a deed over and sold this to anybody in the future. I mean, what happens is when people come on and off a deed or ownership to the property, sometimes they'll do a dollar deed because always have to be some consideration, some money given. So people come off and on all the time. Family members, parents add their children on, take their children off, whatever the case may be. There is movement sometimes without necessarily transferring from John Smith to Steve Johnson. I don't know, just using names. So that is different than, two brothers and one brother coming off because he, wants to go buy something else or whatever the scenario may be. So there is in the enhanced policy, which we're seeing more people opt for. It's a one-time cost at closing, part of the closing costs. They will have several additional more coverages post-closing that can help for that kind of stuff.
Okay, so let's go here. Now, those commercials that we all hear online, we're not going to mention names because, the last thing I want is a lawsuit because I'll just throw this episode right out the window. What I was going to say is they say, oh, you don't find out until you're getting foreclosed on, right? Because somebody took out a mortgage on you. Obviously, you're going to prove that it isn't you, and the mortgage company is going to end up getting screwed at the end or whatever creditor. But you're really getting foreclosed on, correct? Like, they're going to take your home away if it's like another state that's not so consumer friendly, like New Jersey, where they'll give you almost 3 to 4 years before anything happens.
There should be some. I mean, I know a foreclosure automatically will kick in on the 91st day of missed payments.
Of course.
There will be certified mail going out. There will be alerts going out. There will be a time frame, before COVID and, when things were real bad in 08, 07, 08, 08, 09, 10. It was taking 4 years to foreclose on people that stopped paying their mortgage. So there is a lot of notification that is sent out to try to, give that homeowner a chance to make it whole again, and to let them know, hey, this is going to happen. Your property is going to go to auction, whatever the case may be. You're behind, X amount of money. And so there is there's a lot of things that happen in order to get to that point.
Okay. You've given some really good nuggets, and here we say title's boring, but it's also
I try to make it fun.
People don't realize is, can't buy a house without getting title, right? You do a title search and everything like that. So let's keep it very simple. What is title?
Okay. What we do as a title insurance company is we basically check for liens or judgments against sellers before a buyer will take over ownership of that property. For example, lien is a mortgage. If there's an open mortgage on the property, we're going to make sure before we get to closing that we have a payoff for that mortgage, how much is owed if we close on this day, and we make sure that is going to be cleared. If there's anything unpaid, contractors unpaid for work that they did, they slap a lien or judgment on the property. So we check to make sure all of that is free and clear when a new buyer takes over the home. We charge an insurance policy basically in case we miss anything. So, for example, you buy a house 5 years ago. Rates have been coming down, so I hear. Your side of the business, I don't talk rates, but I hear and see that rates have come down from where they were. So somebody that was at 8% that closed a few years ago, now whatever, wants to refinance, makes sense for them. And let's say we provided a title insurance when they originally purchased, they come back to us again, or they go to another company, let's say, for the refinance, another title company. There's an old mortgage that we may have missed from 2010 that's there. We will, they'll call us. We will provide proof. Hey, we issued this insurance policy knowing that that mortgage was satisfied and paid. Here's the documentation. Here's our searches, whatever they need to prove that. Or, which rarely happens, but I don't want to say it never happens. If there is a claim that needs to be made and it's a mistake on our end, then that seller is free and clear of that because it was our mistake, and we'll have to go up the ladder and pay the claim potentially. So,
Okay.
so what title? Yeah. So that's basically in a nutshell what title insurance is. And then we also provide settlement services, meaning I'll come out to the closing, go over the documents with the buyer, notarize it, explain everything, make sure they're comfortable on everything, and then we'll disperse funds, meaning we'll pay realtors, we'll pay attorneys, we'll pay everybody involved in the transaction. So
I'd like to get paid.
going back to how it's changed over the years as well, or your original question when we first started was that never used to happen. We just used to provide title insurance. That was it. Attorneys would disperse through their trust accounts and pay everybody involved. That has changed. So a lot of that now, probably 99% of it is on the title company. And so we handle all that part of the process as well. So
You're not going to like my next question. Here we go. Since you brought it up, New Jersey, or not even all of New Jersey, right? Maybe let's go from Tom's River and up, I would say, right? And parts of New York that I'm aware of are probably only one of the few states that actually use attorneys.
Mm-hmm.
Everyone else just uses title companies.
yes,
Why is that?
just the way that they do business. I don't have a specific answer as to why they don't. We always recommend when you're making the largest purchase of your life, whatever the attorney may charge, a couple thousand, $1,500, $2,000, it's average going rate in New Jersey. They should absolutely have legal representation because they're going to review the contract for you. If you do inspections on the property, they're going to help negotiate that for you. And it's always good to have, because we as a title company can't do that. We can't give any legal advice. We can't advise the client in any capacity as to what they should and shouldn't do as what is standard. So we always recommend it. It in South Jersey, where they don't use attorneys at all, it does fall a little more on the realtor. Gives them a little extra work. And they have to operate almost the same way that we do, though. They have to keep it, they're not attorneys either. And they can't, but they do have to work to get through what we have an attorney review process, because they'll still have that, where, have a couple of days to review the contract and make some amendments to it and changes on both sides, the seller and buyers. So, yeah, we always, the most common time that we see people not using attorneys that I've seen in my career personally is I'll have parents selling to their children. It's an interfamily transaction, or an investor where they're buying a house as is, they're going to tear it down and renovate it. They don't care what inspections may be. Things don't matter. And on the other side of it, with parents selling to the kids, they know the house. They maybe grew up in the house. They know what they're getting from their parents. It's not that people try to get over on each other when they don't know each other, but there's that, anytime there's money involved, people are, sellers want to get as much as they can. Buyers want to get the best deal possible. So it makes sense, and it's a little bit harder of a negotiation. There's no negotiating when it comes to parents, because usually the parents are giving their children a great deal.
So what you're saying is, us as being in New Jersey, we actually got it right for once?
I believe so.
Yeah.
Me, myself, if I'm buying a $500,000 house, which it's not easy to find anymore. More like 700,000, 800,000. You're making this large, even 200,000. It's a lot of money. You're buying something that's that expensive that you're going to be paying for 20 years, maybe 30. Hopefully you pay it off or earlier than 30 years. To me, just makes sense to have an attorney watching my back.
Good answer, especially when you rely on getting business from them.
Well, yes, but I another thing of why I try to pride myself in the business is being honest.
No, it is true.
I don't.
Everything you're saying is valid and
Yeah,
everything else.
yeah.
So if you're giving advice, besides getting an attorney, maybe look into your county, see if they do those services that you provided. What else should first-time home buyers know about title, or what advice would you give them?
Yeah, the questions I get a lot, and I tell all my realtors and attorneys, like, I know I have a good general idea of the whole process from A to Z, because of being in the business for so long, dealing with, as a title company, we touch everybody in the transaction, both sides of the transaction, realtors, both attorneys, mortgage company, processors in the mortgage company. So we deal with everybody. And, the question I get the most is, what can I expect at the closing table? And is title going to be part of my closing costs? Is attorney, and I'll just, I'll jump on the phone anytime with a client and kind of explain to them what to expect, so that there's no surprises in the end. We always tell everybody, here's going to be your closing costs. Bring your checkbook, just in case there's any last minute changes. If there was a last minute tax proration or HOA proration, whatever it is, if there's $100 or $200 off on what they initially wired to us or brought a bank check for, we can make up the difference. It's usually minimal, and probably 9 out of 10 times there isn't any additional funds that are needed. But yeah, that's the most common question I'll get from the buyers, especially first-time home buyers. They don't know the process, and we get caught up sometimes talking in our real estate language, and we gotta, me personally, if I wasn't in the business, I would want somebody to talk to me like I'm 2 years old, like not treat me like a kid, but explain it to me like I know zero, because most people don't. And
You're right, 'cause
so it's hard for us to, kind of separate when we're talking about this with each other all the time and every day, and then explain it to somebody that doesn't do this, that may do this once or twice in their lives. So I want to make them comfortable, and it just makes everybody's life easier.
It really does, and just explain it. And I always got to remind myself, and anyone I'm helping, it's just like, we do this every day. It's no big deal to us, but for the most part, it's everybody's biggest purchase in life. We need to be there, guide them, hold their hand, explain everything to them, just like you said, like they're 2 years old, but with the respect that they deserve.
Absolutely.
Because they won't know what a days of interest is. They won't know what escrow is. They've heard of it, but they don't understand it.
Yep.
Like, oh, why do I got to buy homeowners insurance first? Well, you close on Monday. There's a fire on Tuesday. Where do you think this insurance is coming from? Just little things like that.
I got a question the other day, not to cut you off. I got a question the other day, because we'll handle ordering surveys if the bank requires it, or if the client wants a survey done.
Of course.
And so at the closing table, the client had paid, the survey will be in there as part of the closing costs also. So the survey, they'll map out the boundary lines of the property. Everything will be labeled on there. And they wanted stakes put in the ground. So they'll map out the 4 corners of the property, put a little stake in the ground. And they weren't there yet when they did the walkthrough. They're like, we were looking for the stakes. They're not there. And it's really just a simple answer that we know, but nobody else knows. The attorneys know, everybody in the industry knows. You can't, if I'm buying your house, I can't just go make changes and put these stakes in without owning it yet. Because, sometimes, unfortunately, deals blow up right until the very last day. And, you can't make a change on a property. So the survey company will go in after the fact, lay the stakes in once you take ownership of that property. So, they were like, well, why aren't we paid for them? Why aren't they there? And I said, this is why, so, just something that people don't know either. I mean, there's a lot of little things like that. But
Of course, of course. I mean, they do receive the actual survey on paper, and it's recorded out there. But what they don't know is the stakes don't go out there.
yes.
All right, so let's go here. You have let's say someone has a type, A personality, and they don't want to use the realtor's recommendation or an attorney's recommendation. They feel like they could get title cheaper by doing themselves, right? How, why would they call you personally and your company? And, are the prices between title companies the same, differ, or so on?
So there's a few parts to our costs. And in New Jersey, it is a buyer's choice state, meaning they can choose who they want to use for title. Most of the time, your average buyer doesn't even know what title insurance is. So they will go off their realtor or attorney's recommendation.
Of course.
With that said, the costs break down like this. We charge for the actual title insurance policy. So there's a lender's policy and an owner's policy. That is fixed by the state based on purchase price of the home.
So it doesn't matter if they're going to you or the shop down the street or the shop 5 miles away.
Yeah.
They're all the
that
same.
premium should be the exact same.
Okay.
Can't speak for other companies, but yeah, comparing the actual policy itself should be the same. There's also going to be a settlement charge. So if we're coming out to do the closing, if we're going to be dispersing the funds, that charge, I believe the state regulates also. It went up. It started at $375 when I was in the business, early 2000s, is now, I believe, $625. We charge $525. We don't want to gouge our clients. And then there's miscellaneous charges, search fees, endorsements, if there was any changes to the policy we need to make. Those will vary. So that's where title companies will differ from each other. Every title company should be within a couple $100 of each other. So, some of that stuff can be, put it this way, if somebody comes to me and they get a quote from somebody else and they're $100 cheaper, we will not want to lose the business for $100.
Of course.
But generally every title company should be, around the same ballpark.
Okay. Now let's say that people aren't as honest as you are, right? And you look and compare your, those little miscellaneous fees and everything like that. What's the most egregious thing you've ever seen that one of your competitors, without naming their names, have you seen actually on their CD or HUD?
Well,
whatever the case may have been at the time.
There's so many things, to be honest with you, where, for example, when we went from the COVID era, I hate kind of referring to it like that, but it was a time in our business where we were busy as hell. Rates were 2.5% to 4% in a 2-year period of time. Everybody was refinancing. Everybody was busy. We were up to our eyeballs in business, thank God. But after that, what happened was volume went down. Rates went to 6-7%. Everybody refied at that time that had the opportunity to and got into a low rate. So our inventory, the real estate inventory in general in the state, had dropped drastically, and everybody wasn't making as much money as they were in the past. So those miscellaneous fees, those search fees, were padded a little bit more because the bottom line of some title companies was lower. And to make up the difference in volume, some people did that. So there was, I saw more shopping around then. So it wasn't any one particular fee, just the miscellaneous charges in general.
So people are just, like 10 items instead of being, $25. Certain people are charging $45 per item.
Yeah.
And that it's an extra $200. You multiply that by 100 loans, it'll make a big difference and help you out.
Exactly. And when you look at a closing statement, we used to just have to put our total lump sum fee on there. All right. Our title insurance policy costs combined with the search fees was $3,000. Settlement fee, $525. That's it. That's all the client saw. Now we list line items one by one by one by one. So if somebody does get a quote and they are shopping around, I can compare easily, and I could see where we differ from somebody else and where we can maybe, save the client some money if need be, if money's tight.
All right, come on. Now give me one, please. Just give me one fee that's are you really charging that? Like, I don't know, an email fee or something like that.
We'll
Here's a
have it-
$200 email fee.
And here's the thing, we have fees like that. I'll be perfectly transparent. We have stuff like that. There's so much that goes in the back end of what we do behind the scenes, where we have, I believe, over 60 people that work in our office. We're lucky. I'm lucky to be part of, one of the busy. We fluctuate between 1 and 2 busiest title company in the state, volume wise, dollar amount wise. So very thankful that we have a successful business. But yeah, there is going to be those type of fees. Yeah, I mean, some people will, call it whatever you want. $100 this, $200 that, and
I wasn't talking about you, buddy. I was talking about somebody else.
I know. We wanna keep it PC, So
All right.
we're all playing the same sandbox. At the end of
Okay.
the day, there's 1,000 title companies in New Jersey. They are our competitors, but we, if ABC Title had done their original policy on a house that that person is now selling, we have to contact them sometimes for the title policy. So, there's a competitiveness in the business, but we're all trying to do the same thing. We're all trying to make a living. We're all trying to feed our families. We're all trying to provide a better life for ourselves and our children. And
All right. You gave me the kumbaya.
yeah,
answer.
sorry. This is how I am.
I didn't ask you to
I
call
believe
out
in-
a company.
I believe in
I'm just
good-
calling out a fee. Forget it. You're not playing in my sandbox no more. All right. So let's go here. Simple. What's the difference between a lender's title policy and an owner's title policy?
Okay. So when you're purchasing a home that has a mortgage and a mortgage company is giving financing to that buyer, the bank will require a lender's title insurance policy. What the lender's policy is, it gives coverage for that loan amount. So you're buying a house for $600,000, bank is lending you $450,000 or $400,000. That lender will require that buyer, as part of their closing costs, to purchase insurance for the bank.
Of course.
And that will cover and make sure that their new loan amount at $450,000 or $400,000 is in first lien position on the property. So the bank doesn't care at the end of the day whether the client has their own coverage in an owner's policy, which I'll explain next. They want to make sure their money is secure. So God forbid that person doesn't pay that mortgage, they can, foreclose on the home and be in first lien position to get paid back.
I wouldn't say even though I don't own a bank, but lenders don't care. It's more that they're making
I don't
sure
wanna say
their
they don't
interest is covered.
Yeah,
just like
yes.
just like homeowners insurance.
listen.
They want to make sure that their dollar amount is covered. I get it, I get it.
100%. And I didn't mean to, come across towards the banks in any negative way.
No, I'm only playing with you. As well.
No.
So go ahead.
But
Tell
for
us
real.
the difference between
So if anybody's, and listen, this is what I get a lot at the end of the closing table too, or throughout the processes. The bank keeps asking me for this, and this. I'm like, listen, if somebody's lending you $500,000, they're gonna want to make sure you pay your bills.
Yeah,
You file your taxes,
of course.
and you don't have a huge amount of debt. So you have to take that in consideration when they're asking you for your returns and your stubs and an updated pay stub and all these things throughout the process. We're in a good place in the market if you're being scrutinized when you're a qualified buyer. And you've told me that in the past, and so have other people that work at other banks. And so with that said, owner's policy. The owner's policy, we will cover up to the full purchase price, and that will give that buyer coverage. Meaning, like I said earlier, if liens come up after the fact, or if they get the enhanced policy, somebody's doing some funny business with their deed, that owner's policy gives that client coverage. it says optional on the closing disclosure, because our title fees will be kind of top middle of the page. That owner's policy will be down near the bottom of the second page of the closing disclosure. And it says optional in parentheses there. And people have asked, well, it's optional. Why do I have to pay that? And every attorney says the same thing. They're like, listen, I won't represent you if you don't get an owner's policy, because God forbid something goes bad on the back end and something was missed by us, or there was additional liens that happen to pop up. That person needs coverage. That person doesn't want to pay $100,000 outside of closing for something that happened in 1989 that we may have missed, or our searcher may have missed. So we provide that policy, ensuring that anything like that were to happen, you have coverage. That individual or that buyer has coverage.
Okay, so that was a very good explanation. And when you guys do run title, right, and it's a purchase, you're just running title on the actual physical property, or are you running title and searches on the person themselves as well?
We'll run lien and judgment searches against the sellers, against the buyers. Make sure there's no, outstanding taxes, child support. That's the most common ones. So we'll make sure if there's any of that, needs to be satisfied at closing as well, whether it be a payment plan or they're just going to pay it off in general. So we'll do that for both sides of the transaction as well.
But is it necessary? I mean, I get the child support one, and what about the other searches? Is it like, as long as you do the searches and there's no liens or anything that pops up, do you really have to share it with everybody? Or
No. It basically what happened is it's mainly on the seller side. Anytime we run a judgment search against a seller, anybody that has a similar name, it'll auto-populate. So we just have the seller's attorney match. We'll send them the report. They'll go over it with their client, usually match it with Social Security numbers to make sure, because there's a common one I had. I think it was a refi I did for you a couple years ago. It was two brothers that owned the house and one brother's wife. So the three of them were on there. One was coming off. The guy that was coming off, his name was Muhammad Ali.
It wasn't me.
I might get the last name wrong, but
right.
I'm 99% sure it was yours.
Okay.
So the judgments that had to be initialed and signed off on that they weren't to this Muhammad was like a stack of like 200 pages.
Oh, wow.
So he had, he went through, and I sat there, and they were great people. That did the closing at their house, and generally for refinances, that's what happened. We'll go out to the client's house, and they made me tea, and we were hanging out, and he was just initialing that. None of them were him, But because it's such a common name,
Yeah.
John Smith, whatever the name is, there's a lot of those type of people that have that name. Everything will come up. So it's just another check and balance on our side. So
Okay. All right. Man, we've gone
exciting,
through,
right?
Very exciting. We've gone through a lot. Now, honestly, but something? It's not exciting, and neither is mortgages. Everybody gets what's sexy is a home. That's what
Yeah.
people get excited about. Nobody wants to look over paperwork. And we
Until
don't in our
you're-
regular life, right?
Until you're in it, you don't care about it until you need it.
Exactly.
So
And this is our way of educating people
Yeah.
and helping out. Is there anything else you think, the common consumer that doesn't do this every day should know?
I would probably tell everybody, as hard as it is to kind of stay calm throughout the process, when you're working with a great team of people that work together regularly like we do, like we wouldn't be in business if we didn't have the client's best interests at heart.
Of course.
And there's so many hands on the transaction, like I said, between realtors, attorneys, both sides, mortgage company, your processors,
Underwriting, closers,
Underwriting, our
homeowners
side, yeah.
insurance.
our side, our back office. There's a lot of people that are involved, and there's a lot of, and the actual buyer and seller. So there's a lot to corral in our business that, it's not a quick process. It can be if need
course,
be.
yeah.
And if everybody cooperates, great. We can get things closed in a couple weeks under 30 days. But generally, 45 to 60 days, I'd say is average length of span from signing contract to closing day. And, I want people to be reassured that we're doing everything that we can to make it as easy as possible for them. It's a trying process, and patience is tested with buyers and sellers, and stuff always pops up. When we had bad rainstorms, it's raining a lot right now. We had bad rainstorms a couple years ago. Anybody that was buying a house, you may have looked at the house 5 times and there's not been a drop of water. We had a lot of rain. You do a walkthrough, you're closing the next day. There's water in the basement. I mean, these things happen. Things are always going to happen that are unexpected, and you just kind of roll with the punches. Everything at the end of the day will work itself out.
That's awesome.
So
that's great advice, and it's true. And there's so many things like, hey, remember our closing? Yeah, I know you were really scared of that one. My wife was a little lunatic, but to her defense, she was pregnant.
I get it.
All of a sudden, we go through a walkthrough. There's a fence. Wait, there's no fence anymore.
Yeah.
That was nuts. And obviously, I know you were really stressed about it, but it all worked out at the end.
Yeah, I mean, I want it to be an easy process, but it's not. It's a large purchase. Largest purchase you're gonna make. So anytime there's money involved, it's tough, and there's stress, and it's a house, and to relate it to how our market has been the last few years with no inventory and bidding wars and over asking price and waiving inspections and all that stuff that happens, it's a lot.
Exactly.
So to summarize that, and I've went through it when we bought our house, and we're gonna probably look for something else in the near future again. And what is meant to be is gonna be. If a house you love falls through for whatever reason, it's not meant to be for you.
Of course.
And you will find something better. And I always believe that what's meant to be will be, because when we were looking, we bought a little bit before COVID. We closed in 2020, and we were looking since the end of 2018, and it took us a year and a half, and we lost out on multiple bids. And I had bought something in 2006. We're all taught to buy real estate. My mom sold the house we grew up in. Bought something in 2006. A couple years later, I'm underwater, $100,000 on a 1-bedroom condo, So it was like I didn't want to make that same mistake. So back then, and for people now that have multiple offer situation where you're putting in a offer that's over asking, yes, our market has been continually going up. Thank God, knock on wood. But you don't know. And when I did it in 2020 and we closed, I didn't know. $75,000 over asking. I don't know if I'm ever going to see that money again. Luckily, we did.
Well,
so
I'm sure you did really well.
Yeah,
you're doing really well.
Thank God. Made one right decision in my life. So, but
didn't I give you credit before?
Yeah, sorry.
You made several good decisions. Viv, don't kill him.
Real estate decisions.
Oh, okay. Good,
I
good,
left
good,
that part
good,
out.
good,
So,
good.
but yeah. So it's kind of like I said, just what's meant to be will be. We were in a place that ended up being great for us. Very thankful for that. So,
all right, enough with the kumbaya, bro. Come on, let's move it along. All right, we're gonna end this soon because I am very, conscious of your time. I know it's very valuable, and I'm actually getting hungry and I want to go have lunch. And,
Yes.
It's been a minute, but let's end it on a fun note, right? If you weren't doing title, what else would you be doing?
probably work on a golf course.
That's cool. What as a?
I would. I'd probably do anything on the golf course, to be honest with you. Being out on the golf course is very relaxing. Maybe it's because we come from sometimes not a high stress job, but it's stressful.
That was very stressful.
It gets stressful. So being out there, that's kind of like my release. Don't golf as much having a 2.5-year-old as I would like.
I warned you.
I know. I knew it was coming. I tried to get a lot of it in before she came.
And that's why I said to you, I'm like, yeah, enjoy this, buddy. He's not going to be the same. But
being that I played a lot of sports growing up, once you get into your 40s, it's tough to continue playing sports. So golf is something, God willing, you could play until you're 80, 90. I've seen 90-year-old golfers on the golf course. It's a beautiful thing. Be outside, it's green, it's relaxing, it's quiet, and you're constantly challenging yourself. So
you'd be looking into becoming like a golf pro, or would you be like because you need to make some type of money as well?
Yeah.
Would you be like running the course and stuff like that, taking one of those courses? So those guys do well.
anything. I would even.
The only thing they don't get to do is golf.
They don't as much. They don't as much. If ideal position would be a golf pro. Yeah, I would love that. I would love to teach golf. I love talking golf.
Stop rubbing in that you're good at golf, bro.
I never said I was good.
Most of us aren't.
In the grand scheme of things, we're not good. None of us are good. The pros are good, and that's it. But I love the game.
What's the best you ever scored?
I've shot some even par rounds, never under par yet, but even par.
Even par, yeah.
Actually, believe it or not, playing the best golf of my life the last like 3 months with no practice, playing a few times a month. And I don't know if it's because I have, it's a very mental game. So I don't know if it's because I have no expectations. I'm just going out to enjoy it, that I'm playing well. But
Nah, we're gonna end it there, bro. I'm
love
done
it.
with you.
Love it.
Now I'm mad.
So-
I go hit a golf ball, I can't do nothing, and you're like playing the best golf of your life.
But I'm 40, 45. I've been playing since I'm 12.
Yeah, there you go.
So, it's oh my God, it's a lot of golf.
Yeah.
It's a lot of golf. So it's.
All right, well, enough with this. Listen, bro, appreciate you.
Thank you for having me.
And guys, I hope this helps. This is Eric Silva, and welcome to I Hope This Helps.